Hey everybody, this is Jose Blasco. We are about to start the session. Quick confirmation, please, if you hear my voice, so we know that technology is good and everything is ready to get started. A quick hello on the chat box would do, just for me to know that you hear me well and all is ready. So please, quick message, quick hello would do on the chat box. Thank you very much in advance. I will turn on my video stream as well, so we are ready to begin. Here we go. Thank you so much, guys, for that. So everybody, we are live. Welcome to the session today. Today is September 24, 2020, and we are getting together to do some longer term trading. In the days when we do longer term trading, we focus on options trading. The beauty of options is that options give you options. So basically, we look at directional opportunities, non-directional opportunities as well, and we look at the various aspects of trading options that are available and put together methods and plans in order to take advantage of the market. Okay, and that's the goal for today, as always it is. Okay, how are you, Furman? Good to see you. How are you, Gary? As well, good to see you. It's good to see you all, guys. So before we start, a quick one. I'm gonna highlight the disclaimer on the top of the screen. Please read it carefully. What I mean by read it carefully, I mean every word. It's an important disclaimer for you to keep in mind. Beyond a legal piece of information, certainly it's a good advice, if you wish. So I would like everybody, please, to read it carefully, so you keep it in mind as we go through the sessions. Okay, Alpha, how are you? It's good to see you as well. Thanks to see you all, guys. Thanks for joining me today, September 24. So let's begin, guys. I'm gonna close this particular window and jump into the red station so we can begin the planning. So we got 45 minutes in front of us to go over trades and identify plans. The first thing I would like to talk about is what's happening in the market. Next, I would like to analyze a little bit the VIX, and from there move into the other trades that we have running already or we have identified in prior sessions, so we can look at what's happening. So if you happen to be in those trades, you know what to do, and if you are not in those trades, it's still a good learning experience. And once I conclude that review, then we're gonna start planning new trades for today. Market is open, so the trades that we find can be executed live. Okay, so first, the S&P. You can see the S&P has been falling hard in recent times. I mean, not a surprise, we know this well. And when looking at the VIX, okay, the implied volatility index for the S&P 500 index, we can see that the recent drop in price has implied a little bit of an increase in volatility measurements, which are pointing currently at 29. Okay, so if we were to go back, let's say 1 week ago, okay, so that would be, somewhere around 1 week ago was what? So it was 17. So if I was to look at the 17, on the 17, we were talking about levels of the VIX, let's call it 27, 26, something like that. VIX is currently trading at 29, so we have a little bit more premium available in the options, and therefore, as you can see, I already highlighted non-directional trades as credit strategies. So I'm going to start with that type of trade. Why? Because since the premiums available in the market seem to be high, I rather sell them and collect high premium instead of buy them and therefore have to pay high premium, right? It makes sense, isn't it? So we're gonna start looking at non-directional opportunities in a minute after I complete my review, because of that one reason. Okay. Now, when it comes to a review, let me scroll down to our review section, and we'll start with Nike. Okay, which Nike is an unbelievable stock. Okay, so when Nike was trading at 97. We were planning, I commented on this, every week I keep commenting on this, and a few more weeks to go really, because let me show you Option Station Pro, and you will be able to see in the Manage tab some of the trades that we have identified before. Here we go, Option Station Pro. So moving into the Manage tab, here we go, Manage tab, and again you can see here Nike, okay, being a trade where we purchased a put, meaning expecting Nike to fall. That put still has 22 days to go. When we purchased that put, it cost us $385, and the beauty of that is that the most you can lose is $385. Notice that currently this trade is showing $379 of loss, which is almost 385. And why is it that we are almost losing the whole thing? Well, because this trade with Nike is a trade where it went all the way, absolutely all the way against us. Okay, so notice how at the beginning of the trade there was a little bit of movement in our favor, a couple of times, even 3 times. Okay, we were expecting it to see Nike fall, but instead, not only it went against us by a little bit, actually by a lot, and next thing you know, a huge gap up from 115 or so all the way to 125 or so. That is an incredible, absolutely amazing movement of price in that particular stock that went all the way against us. And I love to point at this because first, we don't want to always look at winning trades, because that's not trading. Trading is a mix of winning trades and losing trades. But second, I love this example because not only is a trade that we have running, but on top of that is an example of the beauty of options, where when you buy an option, the most you can lose is what you pay for the option, which is 385, no matter how far the stock moves against you. Notice how crazy far that stock has been moving against us. And so what? The most we can lose is 385. Okay, that's a beautiful thing to be done. And as I always highlight when managing your trades and managing a portfolio of stocks, so you would always have positions that point at the upside, positions where you are bullish. You would always have positions such as Nike that point at the downside. And the idea is to have a few of each, all with positive gamma, meaning that while this trade worked all the way against us, other trades were close for profits in the meantime. And again, the beauty of options is that the most you can lose is 385 in this case. So it doesn't matter how much further away it moves against us. All the other profits collected count, because the amount of pain we can receive from Nike is capped at 385. Okay, so again, great example, this particular trade. So I'll keep looking, I'll keep displaying this trade for another 22 days until Nike options expire. Okay, now the other trade we have here, it's a trade with FISV. This is a pure non-directional trade where we're expecting that stock to stay in a range set by the purple lines. Okay, so we sold calls above, we sold puts below, and as of now, the stock is in the middle of the range, as expected. So again, traveling towards the date October 16, which is when the options will expire, and therefore the profit collected will be kept as ours. Okay, so it's looking good so far. We still have another 3 weeks to go, if I do the math correctly, isn't it? So October 16, it's going to be actually 4 weeks to go, right? So we have 3 weeks to go, okay, plus the remaining part of this week. So 3.5 weeks to go, if you wish, to get to October 16. So the moment we get there, this trade will be fully profitable. And again, as of now, it's looking good. The other trade I wanted to review with you is Now, which is a trade that we did kind of reviewed last Thursday, but it was not a full confirmation. And the reason why it was not a full confirmation is because the trade was not closed yet. I mean, last Thursday was the 17th. This trade was expiring on the 18th, which was the day after. So I want to show it to you one last time, because in the end, as you can see, on that Friday, the stock did close above 445. So that was a bull put spread. It was a neutral long trade where for us to profit, we simply needed the stock to stay above 445, no matter how far it went up. As long as it was above 445, it would be profitable, and the stock closed right there on that Friday, September 18. So this trade was a profit. Next trade in line, SPG. This is a trade that is running. If I was to compress that particular chart, you would see that this trade, while it's working well, this trade is looking weaker compared to the trade I showed you with FISV. It's the same type of trade. We're using the same expiration date, October 16. The difference is that FISV is still somewhere in the middle of the range, where you can see SPG is somewhere in the bottom part of the range. So we are getting closer to be proven wrong at 54. So we still have 2 UFOs to defend ourselves. So it's not like we need to be concerned, but certainly this trade looks more disadvantageous compared to the prior trade I showed you with FISV. Okay, so with again, for the ones of you that are new, or maybe you're watching this recorded, something that I've been saying for a while in the YouTube channel here is that the way I'm planning those trades is that you take the trade, you close your eyes, and you wait until the expiration date. Because the beauty of iron condors is that the most you can lose is limited. So in this sense, you just wait, okay? And it's either you lose the amount you were ready to risk, or you profit the amount that was collected as a credit, okay? And nothing wrong with that. And this trade with SPG may end up working perfectly well. We'll see. We need to wait to October 16 to see that. But at the same time, there are other ways on how to manage those trades, which I am not discussing at the moment in the channel. I will in the future. And these particular active management techniques basically would have you act before, okay? And I know some of you, I don't know if Mark, you are with us today, but I know some of you have been in this trade before and chose to close it, okay? And it makes sense, okay? Because if you look at how much credit was collected in this trade, and just to keep the math easy, let's say the credit collected was $1, okay? And for you to make $1, you need to wait until October 16th. But let's say just after a few days of trading, maybe price is right there, okay? Let's say you already made half of that, okay? And you look at the P&L, and because the markets got calmer, because time has passed, because the stock is exactly in the midpoint, because of a different set of reasons, you were to see that iron condor that is currently trading at 0.5. So you could argue it's a good idea to close it. And yes, you're going to make half, because instead of making one, you're going to buy it back for 50. So you make the difference, which is 50. So you make half of one, but you make half of one with only 1 week or so of time spent, instead of having to wait 1 month and a half. So what is more efficient? To make half in 1 week or two, or make the whole thing, but you have to wait 4 times more, right? So what is more efficient? So again, from an efficiency point of view, being active on the management would be better. And for the ones of you that did that, not sure if Mark is with us today, I'm just remembering out of, on the top of my mind, I'm remembering Mark is one of the students who did that. I'm sure more of you have done it too. But just in case, I wanted to check if Mark is with us to have that confirmed. But again, so I'm just gonna continue, displaying this trade until October 16, so we get to fully understand what happened to the trade in the end. But just know that you could be a bit more active and get out of those trades, and that's it. Okay. Beyond Meat, that's another example of a trade that is currently working according to plan. Okay. So we are also traveling towards October 16. So we are more or less in the middle of the range. We got a green UFO there, likely going to push the price back up. So again, looking good for Beyond Meat. Okay. What else? Octa is a trade that expires today. That expired last Friday. Okay. So again, this one I showed it to you last Friday, and it was looking very good for this trade to be profitable, because last Thursday, as we started the session, so the price of that stock was, I believe, somewhere here. Okay. On Friday, it ended up right there, and therefore it was a full profit because we did end up in the purple range. Okay. The next one was PayPal. Okay. And that one was a bit challenging, even though in the end it was fine. Let me show you that. Okay. So we needed to stay inside the range until September 18. Okay. And notice that the closing price was right there, which is inside the range. So in other words, even though the market was a bit challenging for a while there, we're having price go beyond the range and then came back, thanks to that UFO right here, where price hit the UFO and then came back. Okay. So while that was a bit challenging, this trade ended up profitable. Okay. For the ones of you that join me in the sessions that I also do in You Can Trade, you probably remember that when the market opened on the Friday, I was actually commenting here when we had a gap up right here. I was commenting to close the trade. We looked at the real-time P&L at the time, and it was showing that you could have closed it for a $15 per contract profit, and I recommended to do it just in case. Okay, so if you had waited to the end, you were fine. But let's face it, it would have been a little bit of a lucky bet, right? So the recommendation, the right approach, was actually to close it manually right at the open on the 18th. Okay, so another profitable trade. Alibaba. This one is a trade that we planned together last Thursday, and that one is working well. It's looking like it should probably end up in a good position. So last Thursday on the 17th, we were planning on this trade and we said, hey, we need Alibaba to stay between 292 to 55, and if that's the case, we're gonna profit. We got into a trade, and as of now, Alibaba is trading right there inside the range. Tomorrow is around the corner, so as long as we survive tomorrow and we are still in the purple area, again, another trade that will be fully profitable. And then we also have Biogen, which is a trade I put together on Friday. So I did that by myself. You guys were not with me in the YouTube channel. I did that in You Can Trade. Okay, and in this particular case, you can see how. Sorry for that, guys. I got my phone ringing here. So you can see how in this particular case, we are in a very positive situation as well, because even though Biogen is falling and is a little bit in the lower part of the range, really, again, we are very, very close to the vertical line that points at tomorrow. Plus, we got 2 UFOs to defend ourselves. So again, it's looking really, really good for those 2 trades to conclude as a profit tomorrow. Great. So we got all the review done. So hopefully this is useful, again, for the ones of you that are in some of those trades. Hopefully this helps you and guides you into what to do or what not to do. For the ones of you that are not in these trades, this will certainly help you very, very much as I begin planning trades today, because I'm going to be planning trades of these sorts, and therefore you're going to be able to follow the process, okay? So let's go ahead and let's begin with my non-directional trades. Notice the first thing I did is to sort the prices from more expensive to less expensive. And if that's okay with you guys, I will ignore Amazon and Google, not because they're wrong or there is not a good idea to trade those stocks. Those stocks are actually amazing stocks, but just because I am assuming that most of you attending the session are probably in learning stages. And therefore, if you want to practice some of those trades, you probably appreciate a little bit lower price points, so you can practice some of those trades with less risk. Of course, the higher the price of the stock, the higher the risk, and therefore to make it more affordable for everybody. So I'll start here with Alibaba and Biogen, which, by the way, I'm gonna skip because we have 2 trades on those 2 stocks already. So I'm gonna start with Amgen, okay, and see if we can plan good trades with those guys. Okay, so I'll start with Amgen, $242 stock. Loading the chart, PD on the upper left, that means pending data, so waiting. Here we go. I got the data. Okay, I got 48%. 48% is acceptable. We need a minimum of 48% to do an non-directional trade, so I got what I need. What if I look at pre and post market? If I look at pre and post market, I got 44%. That is not acceptable. Okay, so I'm not gonna do it. So I'm gonna have to ignore pre and post market and look at regular session only. Okay, and when I look at regular session only, at least with this particular view, I got a problem, because while I got multiple UFOs below, I only have 1 UFO above. And one of the key rules that we use to do non-directional trades is that we need at least 2 UFOs above and 2 UFOs below. In this case, I only have 1. So let's take a look at the larger, broader view of that stock. I'm looking at a monthly time frame. Notice how the highest price point that was traded on the stock happened to be in July, okay, in July. And if I load data here, so that peak is actually the one from July. So in other words, this is the all-time high of the stock. There is no market data above this price point. So there is no way for me to know if there are unfilled orders or not above that price point, because that stock has never traded above that price point. So I don't have what I need to do a trade. And therefore, I'm just going to move into the next one, which is Spotify, and see if that one is going to work or not. Okay, so we'll start here with Spotify. We have 54%. That's a good beginning. We got at least 2 UFOs above and at least 2 UFOs below. So that's, again, a good beginning. If I look at pre-market and post-market, I have 39%. That is not acceptable. So pre and post-market data will be discarded, and we'll plan everything out of the regular session data, which I'm okay with that, given the fact that we have UFOs above and below. Okay. Now, before we get too excited, always, 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 absolutely critical, check your earnings report date, which happens to be October 26. So that's great. That's about 1 month from now. So I can use next week expiration date, next week expiration date. I can use so many expiration dates. So that is looking good for me to go deeper into attempting a trade with Spotify. So loading SPOT. Okay, looking at all the different expiration dates, and I'm going to start with October 2nd to see if October 2nd is going to provide what I need or not. Okay, so how do I find out that? I'm going to right click to analyze and sell, and I will select Iron Condor. Okay, using not the September 25th but October 2nd. Okay, so the moment I select that, and of course I will need to customize the strikes. Okay, but forget about this for a minute. The minute I select that Iron Condor with whatever strikes using October 2nd expiration date, and I see my minus and plus 1 standard deviation, so now I know that the statistical range is between 209 and 248. Okay, so 209 and 248. Let's go ahead and adapt those dotted lines to 209, okay, and 248, which is something like that. Okay, something like that. And in other words, this is the current price. And from now until next Friday, statistics suggest that this market is going to either go up or down or whatever it does, but should stay between 248 and 208. That's what statistics suggest. Okay. Now we're not gonna take trades just out of statistics, which again it would not be a crazy thing, but it will not be the highest probability thing to be done. So what we're going to do is lean against at least a couple of UFOs above and below price. Okay, and if I do this, if I got two UFOs below, right? So if I draw my line at 186, which is below the second UFO, and I was to calculate the vertical distance from the current price to that UFO, and then I was to project it to the higher part, notice that basically I would find out that this UFO is what makes it more or less equal distance. Okay, equal distance. Another attempt I could have is to go for the next one, and if I go for the next one, which is a bit higher, instead of 275 is more like 277 almost. So if I was to project price below, it's getting actually into where the other UFO is. Okay, so in a perfect trade, in a perfect world, you will want to rely on 177 and 277, because that would give you a position in the chart where the current price is exactly or almost exactly in the middle, which is where you have the greatest statistical advantage. It's very unlikely to reach 277 or reaching 177, given the fact that we are right in the middle. Okay, so we have a setup. I love it, to be honest. I love it so much that I am concerned about how much we'll get paid if I sell the 277. Maybe we get paid way too little, given how wide the range is. So let's take a look at 277, which is right here. And yes, we do have a problem. We get paid 22 cents. Our minimum is 35, and 22 being less than 35 is simply not enough. So what are we going to do? It's very simple. We're going to go ahead and check October 9 to see how much we get paid with the October 9 for the 277. And now it's looking so much more decent. It seems that we're going to get 68 cents. That's much better. Okay, I'm a bit concerned with liquidity here, but I'll come back to that in a minute. At least I got the premium I need. Now, don't stop there, because wait a minute. We said the statistical range is 248 to 209, but that's only true if we are using October 2nd. So you are out of the trade on October 2nd. But what if we're going to be now in the trade for another extra week to October 9? Of course, the statistical range is going to be wider, going now from 255 or 256 to 203. Okay, so let's go ahead and move to 255, okay, and 203, which is still fine, meaning that our UFOs are still beyond the dotted lines, okay, and therefore, we are still within the statistical range, and the UFOs are beyond, protecting us in case price goes either further above or further beyond or further below the dotted lines. So everything is looking good so far for us to continue putting this trade together. So let's continue with the planning, and again look at the above the 277 and 280. Okay, we're going to look at that 277 and a half and 280. Let me write it down. Okay, so we're going to go ahead and buy the 280 call and sell the 277.5 call. Okay, we're gonna do this, at least for now, we are planning to do this using October 9, 2020. That's the expiration. Okay. And below, we're gonna be selling. I would anticipate the 177.5 put, and then buy the one below, which is going to be the 175 put. This is what I would anticipate, but of course I need to check that on the option chain. Of course, I'm looking at the 177.5 for obvious reasons. Our purple line is 177.6, so of course 177.5 is the one. This assuming it does exist. So, problem. It does not exist. We have 175, okay, and then we have 170. And that I'm very unhappy for two reasons, okay? So I'm gonna have to tweak this plan to see if we make it work. So reason number one why I'm unhappy, liquidity is terrible, okay? Those strikes have very bad liquidity. I mean, no contracts were traded. I could tell you 2 contracts were traded yesterday, okay? But no contracts traded today. The bid price is less than half of the price of the ask price. So again, if you need to exit that iron condor, you're gonna get killed on slippage. So I'm very, very unhappy about that, and I cannot fix it. So my only way to fix it really is to move to the next expiration date, which is October 16, which may work in the sense that this one is a monthly expiration date, and typically monthly expiration dates are more liquid. Okay, so now I got 75 and 105. Again, liquidity is not the best in the world, actually, at all, but certainly this is much more reasonable. Okay, and maybe we can make it work. Now, I'm not happy about another aspect of this trade, which is the fact that the strike price increments here are $5 at a time. Okay, while on the top, well, we don't have it either. Okay, earlier we had. Let me go back to the chart so you see my point. Earlier we had 280 and 277.5, which is $2.5 of difference, meaning that your risk would be $250. Now we don't have that. So now the minimum you can risk is $500 in this trade. So it's not ideal, okay? But since we are working on it, so let's complete the plan for this trade and let's see what we can do, okay? So, so what am I gonna do above? Okay, well, I can sell, okay? I can sell the 275 and buy the 280, and now I'm risking $500. And below, what we can do is sell the 180 and buy the 175, and again I'm also risking $5 below. Okay, so that's a possibility. So let's go ahead and take a look at statistics first, because again we are now moving from October 9 to October 16. So let's double check stats. Now statistics suggest 262 to 200. That's the statistical range. Okay, so 263 to 200. So 263, oh, not that one. I was moving the text. I wanted to move the line. So 263 is somewhere here, and 200 is somewhere there. So again, yeah, from a statistical point of view, certainly the setup of the trade does make sense. It does look like a valid setup for the trade to work well. Okay, so let's take a look at what would happen if we were to sell the 275 above. Oh wow, did I see this right? 275, 280. Yeah, so basically we have no trade, guys. Okay, sorry for that. On the upper part, actually, our strike price increments not only are not 5, actually on the upper part, the strike price increments are $10, which means that this trade now would be a minimum risk per contract of $1,000 risk. Again, could be valid to some of you, but assuming that the majority of you, that's my assumption, are in learning stages. So then I'm just gonna pass on Spotify. Okay, well, the setup is beautiful, beautiful, but strikes have not been released. Something you could do, by the way, even though not for today, but you could do it, is to call your broker and request that strike to be released. And probably by tomorrow you would have that strike as a tradable strike, but it's not available yet. The exchanges have not listed it, and therefore you cannot. Okay, so I'm gonna have a sip of water and we're gonna continue, guys, if you don't mind. Thank you for that. So let's go into the next one. Okay, so the next one is Twilio. So let's take a look at what Twilio has to offer. So we have multiple UFOs above and below. we have 54%. That is good. If we look at pre and post market, are giving us 43%. So that is not valid enough. So we're going to move back to regular session. This is the market data we're going to use. And then before we get too excited, again, as always, check earnings. Earnings are happening over 1 month later. So again, green light to use multiple expiration dates, starting with the one next week, which is October 2nd. So let's go ahead and what was the stock again? Twilio, I believe, right? Yes, TWLO. So TWLO. Let's go ahead and load Twilio and see, using October 2nd, what statistics would suggest for this trade. Okay, liquidity is not amazing, but it may work. Okay, often you find very good opportunities in stocks that are not so liquid, so sometimes it's worth it to give it a try and try to get a good feel. Sometimes you won't get filled if the liquidity is not good enough, okay? But it's certainly worth it to give it a try. So again, October 2nd, by selecting that particular expiration date, is telling us the one and the plus and the minus one standard deviation is 266 to 217, okay? So 266 to 217. Let me draw a dotted line at 217. So style dot. So 216 something, and then I think I said 266. Is that what I said? I think so. So let me double check one more time. 266, 217. Yeah, good enough. So again, this is the location of our statistical range, and therefore we need to look for two UFOs above. So this is 1 and this is 2. Okay, and that would be 3. And then two UFOs below. This is 1 and this is 2. And given the fact that, below we have less choices, so I'm going to have to calculate the vertical distance from the current price to the below UFO. Okay. And if I was to project that distance higher, okay, basically we are not exactly equal distance, but almost equal distance to that particular guider. Okay. So if I was to define a statistical range to be like that, I guess you are with me that it would make sense. Okay, it's not as perfect as the prior trade where we were almost exactly in the very midpoint of the chart, but almost. Okay, and by the way, guys, you've been so silent during the session, so please go ahead and type in the chat box. That's always good. I know I've just been going, just keep going. Of course, the market is open, so I'm eager to find an opportunity that is tradable and I can give it to you. But also, I want to make sure you guys are following. I believe so, because I see you all connected there and quiet, so probably you are following, but I would appreciate a little bit of confirmation, guys. So what do we have? Well, 285 to 184, it's our trade. So let's take a look at how much we get paid for the 285 if we were to sell the 285 option that expires in October 2nd, okay? And that option pays 90 cents, okay? So 90 cents is indeed more than 35, and therefore it's a valid selection, at least for now. What about 189, which probably is going to be 190? So with a 189, which is probably 190, we are talking about 67 cents. But here I am very uncomfortable with the level of liquidity, as well as we are back to $5 strike price increment from 190 to 185. I'm not happy about that. On the upper part, we got 285 to 87.5. So we got $2.5 of strike price increments, but not on the bottom part. So you know what? Let me check October 9 to see if that would be better. And the bottom part is the same, 185, 180. So I'm not happy. What about October 16? Normally it's more liquid because it's a monthly expiration date. Let's see. So we got 185 and 190. So I'm not happy. But what's much better is the liquidity. 99 to 119, 81 to 102. So this is way healthier, even though the fact that we got $5 of strike price increments don't make me happy. On the upper part, look at that. Same story is happening. We got $10 of strike price increments on the upper part. So again, it's like market makers are playing the same game with both Spotify and Twilio. So unfortunately, guys, I'm gonna discard the trade. Okay, it's a shame, but I'm gonna discard it. Okay, let me read your messages here. Fairmont, if I take the directional scanner and change the daily interval to 60 or 240 in the custom tab, will the scanner still work? Yes, of course, it will work. It will work. But the scanner is designed for options. Okay, so you want to make sure when you buy options they are cheap, and at the moment they are not. Okay, so you're going to have very few opportunities only, as you can see, very few opportunities because options are not cheap. And if you're going to be doing like 60-minute or some trades like that, so probably using futures markets instead of options would be more efficient for you. Okay, but again, you can certainly backtest it and see how it goes for you. So what is TDOC? It's Teladoc Health. To be honest, I never traded a stock before. So let me see what the probabilities are. Pending data on the upper left. So we got 46%. That is not acceptable. And if we look at pre-post market, 46 becomes, waiting for data. Come on. Becomes, stays as 46. So not acceptable since we want to trade at least 48%. Now, Microsoft, of course, Microsoft is an amazing stock. So amazing that many people trade it, and therefore it's difficult to find a good trade. 53% with pre and post market, and 48% with regular session. So we could use anything we want, regular session and pre and post market. Great. Earnings on the 21st of October. Okay, so all looking good for us to go ahead and attempt a trade on Microsoft. Even though for non-directional purposes, normally it's a bit tough because of what I said. Many people are trying to do the trade, right? So let's begin with October 2nd. Okay, no need to concern about liquidity here. That stock is amazing from a liquidity point of view. So let's begin with October 2nd. Standard deviation suggests 216 to 193. Okay, so 216 to 193. So 193 would be there. 216 would be here. So we have 2 UFOs above, one green UFO above as well. So as long as we have any UFO below, that's good enough. So let me check pre and post market if we have anything nearer. Well, actually on the upper part we got nothing nearer. The nearest one is 230. Okay, and the bottom part they are actually many UFOs. Okay, there are many. So of course for the top part I don't have much to choose from. I'm gonna have to use that one. On the bottom part I do have multiple UFOs, so let me draw them and you will see why in a second. I'm just drawing them all. So now let's go back to regular session. Okay, so that one coincides. Okay, good. So and there is another one here as well. That one we did not see it on the pre and post market data, isn't it? So what am I going to do? Since I got less choices above and more choices below, I'm just going to measure the distance from the current price to my only choice above. Okay, because above that, Microsoft is making all times high, so that's my only choice. So what I'm going to do to be exactly in the middle is I'm going to take this vertical line and project it below. Okay, and it seems that that particular UFO located at 176.5 is the one that would make my trade to be as perfect as possible, meaning the current price to be as in the middle, position as in the middle as possible. Okay, so let's go ahead and see how much we get paid for the 230s on Microsoft. I believe it's going to be too little. So 230 is only 10 cents. Okay, yeah, of course, it's too little. The range is too wide. So let's check October 9 for the 230. 230 is paying us 36 cents. That is acceptable. So let's begin here with October 9. Of course, if I switch to October 9, statistics change to 220 to 190. So let me update this to 220 and 190. Okay, which is good because we are still, our lines 176 and 230 are still beyond the dotted lines. So certainly it's a possible approach for us to do this trade with Microsoft, where we would go ahead and buy the 232.5 call above, sell the 230 call below. All of these would be using October 9, 2020 expiration date. okay, and below we could be selling the 177.5 and the 175, for example, assuming this is available. So we're going to check now in just a second. Okay, so let's get into the option chain. So on the upper part, we're looking at 230. We already said is 36 or more. That's good. On the bottom part, we're looking at 177.5, and we get paid 56, which is also good. It's more than 35. So let's go ahead and implement this trade here. So we are doing 230, 232.5 on the upper part. On the bottom part, we are doing 175, 177.5. Okay, and with all of this, basically right now we don't have a trade. Okay, let me explain why. So the rule we have is that we want to collect premium, which is greater than or equal to 15% of raw risk. Okay, so how much is the raw risk? Well, it's $2.5. Okay, the distance between strikes is $2.5. So 15% of 2.5 is 38 cents. Okay, so 2.5 times 15%, that is 37 cents and a half, 38 cents. Okay, so how much will we get paid if we do this trade? 20 cents only. Okay, 20 cents only. So what's the issue? We are not being paid enough. And this happens often with stocks like Microsoft because that stock is so liquid, so many people are trading, and therefore the prices are kind of coming together, and therefore the difference between strikes, the premiums collected are often challenging. Okay, so what can we do? Well, we can try October 16, which is the next expiration date, and see what's going to happen. Okay, now with October 16, it's looking like some strikes may be missing. So on the bottom part, we had 175, 170. So now we're going to have $5 of risk. Okay, that's something that we're going to have to assume. And on the upper part, again, we got 230, 235. So again, $5 of risk. Good news now is as $5 above, $5 below, instead of $5 below, $10 above. Okay, so at least we got it equal this time. I'm not delighted by this, but at least we can give it a try and see if it's going to work. So right click to analyze and sell an iron condor. Okay. Using October 16, statistics suggest 223 to 188. So let me make sure my statistical range it's valid. So we said 223 to 188. Yeah, 223 is somewhere here. That's what statistics will suggest. Okay. And 188 is somewhere there. So that's what statistics will suggest. And again, our location for the UFOs are in a good location. Okay, so let's give it a try. Okay, I'm going to give it 2 more tries. Okay, to Microsoft. So we're going to be doing above. We're going to be doing the 235, 230. Okay, did I say that right? So yes, 235, 230. That will be the upper part. And the bottom part, we're going to have to do 175, 170. And that's how we're going to do it, 175, 170. So let's go ahead and do it. So 175, 170. And when doing so, okay, notice that we get 45 cents of credit, which will not work because our raw risk is 5. And we are looking to capture 15% of the raw risk, which is 75, right? And 46 is obviously less than 75. So we are not close enough to what we need to accept the risk of this trade, okay? So I'm gonna give it one last chance. And if it doesn't work, you know what? Then it doesn't work. And that's it. And that's trading, guys. Sometimes, we gotta say no to trades and it's fine. So I'm looking at 23 of October. Am I still okay? No, I cannot actually, because 23 of October would actually surpass 21st of October, which is the earnings date. So actually, I cannot do the trade on Microsoft because of those reasons, and therefore I'm just going to have to pass. and say, thank you very much, Microsoft. We tried, but it's not working. You are not giving us enough, and we're going to be disciplined in the approach. It's not meeting the rules, so we're just going to pass. Okay? Okay, and looking at the time, we are just a few seconds to go from 11:45 in New York, which is the time to conclude the session. So I guess that will be it for today. Let me see if there is any final question, or if you have any final question, please type it now, so I can address it before we conclude the session, because then we'll be done for the day. Okay. Yeah, I'm looking again at your comments, Fairmont. Yeah, the last thing I can read is you said all is good. So I'm just gonna wait 1 minute or so while you guys are typing, just to make sure I'm not missing anything from anyone in case you're typing now. And then we will, again, as I said, we will call it the day. Yeah, so it doesn't really seem that you guys are typing. Yeah. Pretty fun week to trade, to be honest, for the ones of you that have been doing intradays in it. Strong moves to the downside, powerful moves to the upside as well. So intraday trading has been a lot of speed of movement in both directions. So hopefully you guys have been able to seize some of those opportunities. Okay. Yeah, cool. I see your messages, guys. You guys are confirming all is good. Okay, my friends. So the session is now concluded. As always, it's been my super pleasure to be guiding you in today's session. No trade today, which is not a feeling I like very much, especially when we are doing the sessions together. I always like to give you something to practice with. As a trader, I understand, and hopefully you do as well, that many times trading is about sitting on your hands. Okay, so you don't want to take every trade in the world. You want to trade only the ones that meet your rules. That's quality. So saying no to trades is part of our job. Actually, we should discard trades more often than the trades we accept, isn't it? But again, in those sessions, I always like to put some trades that are actually tradable. So I know I give you a little bit of homework and things to do so you guys can learn. Not today, though. Hey, the market is the boss, so market will respect what you have to offer, my friend. Thank you very much for you guys joining us, and thank you very much, market, for being there for us. You guys take care. I will see you soon in the next one. That's gonna be next week. Take care, everybody. See you soon. Bye bye.